Welcome to Chart Request Live. I'm Spencer Israel. That's JC Peretz, new show here at Stock Market Media, where it's very simple. You have a question, you have a ticker, you drop it in the chat. We answer the question. We do this for a few minutes, and then we all go back to our days. And that's that. Pretty simple, right? Before I forget, kind of a new channel here. If you want to do us a solid and drop us a like, we would appreciate that. Thank you very much. Drop the video a like, subscribe to our channel. That would help us very much. All right, JC. Earlier today, I went out and I solicited some tickers for us to discuss publicly and privately. I have a list here. That list is not that long, hence the need to get more tickers from the chat. But let's start with the tickers that I've got on my list to discuss, or that
Sure.
people have asked me to discuss today. And let's start with sort of the big one here, which is First Republic Bank. It's FRC. I believe it's the most traded stock in the market in the U.S. today. One of these crazy bank things. And I don't even know. I clearly it's not halted because it's trading, but it's having a wild day, a wild few days. Can you even analyze a chart like that, or not really?
Yeah, I mean, when situations like this, really what we want to do is we want to zoom out. So if you want to take a look at here, we could change this to a monthly chart here, and really gives us an opportunity to zoom out. Now remember, this is a monthly chart, so this is an incomplete candlestick. Right?
Mm-hmm.
Let's label this properly, like responsible technicians, FRC. Everybody knows what we're looking at. So this is a long-term chart. So I mean, if you really want to look for crashes and look for support, look at those former lows, right? So this was back in 2011. And here we are. And where, we briefly undercut those levels, right? And now we're trading right around 35.75. So sitting right around here, right? So right in this area here. And, what's interesting is that when you look at old support at these levels, you can even say that, hey, if we're above these levels, call it, call it mid 40s, right? Call it mid 40s, 45, 46. You're above that. You want to be long, knock yourself out. I mean, right now we're at 35.74. So we're stuck below that, right? So keep in mind that former support is now some sort of resistance, any attempt to get back above those levels. So that's what I'm looking at there. I think this is a good, clean way to check it out. It undercut those prior lows, bounced back above it. Now maybe it gets back into those mid 40s. I think it'll likely struggle if it gets above there. But if you have any sort of ambitions of First Republic Bank stock trading in the future, I think getting back above those mid 40s is not a want. It is most likely a need.
Yeah.
So I am not that optimistic about it. This isn't really my game. But if this is your game and a game that you want to play, I think 45 is a big one. Above there, I'd be a lot more confident that this is not a zero. In the meantime, just assume it is, I think.
All right. Full disclosure, I have several more bank stocks I want to bring up here. This is just the first. Let's look at Credit Suisse here. I know it was ripping this morning, and just a reminder for everyone trading a stock like Credit Suisse. Credit Suisse's primary market is overseas in Europe. So whatever happens to the CS ticker on the New York Stock Exchange is really merely a reflection of what is already happening in Europe, because they're ahead of us, obviously. But let's bring up CS here and take a look at that. So ripping on the news that the Bank of Switzerland is coming to the rescue because they are a systemically important bank in Switzerland. So another stock that is hitting, I don't know what, JC, 10-year lows. I really don't know, or was
all-time lows. Yeah, just continues to make new lows. This is Credit Suisse, just for everybody to know. I just want to mark here, I think it's important that this is the 2007 Great Financial Crisis peak, just so that everybody knows what was up here, right? Here, you guys are seeing the live. This is live charting, Spencer. This is real. This is how the sausage is made. And then this is the 2009 Great Financial Crisis bottom. Just to put things in perspective, guys, this was the peak. This was that crash in 2007, 2009, all the way up here on the upper left. And here we are now. Usually when you talk about the financial crisis bottom, it's usually on the lower left, right? In this case, it's in the upper left. And if that doesn't tell you everything you need to know.
Yeah, okay. All-time lows, you got to go. Makes sense to me. What about XLF? Not a stock, but the largest financial ETF out there, the most actively traded, the most liquid, the one with the most assets. What are you seeing in XLF right now?
So here's XLF. Here's the great financial crisis peak, right? So this is the 2007 peak, and then this is the entire crash. By the way, just to put things in perspective, this is the low in financials, right? Down here. And Credit Suisse, look how much lower it is from those levels, just to kind of put things in perspective, which is hilarious, right?
Yeah.
I mean, you got to laugh, right? I mean, you got to laugh. So then here's the 2018 highs. Then here is the 2020 highs, right? Before the COVID crash, right? Not a coincidence that it kept peaking at all of those levels. And then this was the retest last summer in June, when essentially the market bottomed. This is when the list of new 52-week lows across the board between the New York Stock Exchange and NASDAQ, that is when that list peaked. So, and sure enough, financials also retested those former resistance levels. By the way, home builders did the exact same thing. So they look exactly the same. So for me, from any sort of longer term structural perspective, I think that what we want to do is we want to just go with the same message. If we're above the 07 highs, we want to be long financials. I think that's a bullish thing, bigger picture. Now, just because bigger picture, that's the case, and we're above those levels, and we have been, where are we on a more short-term basis, right? Let's take a look at that. So where are we on a more short-term basis? These are those lows, right? These lows, those June and fall lows in financials are essentially where we're bouncing now. Granted, it's a big range. Oops. It's a big range here. And you had a little failed breakdown here, right? There's your support in financials. And we got back down there. We didn't totally retest those levels, right? We didn't even retest those levels.
So like what I'm seeing, like when I see huge daily candles, like we've seen the last week or so, like maybe you can. I mean, you're the expert here, JC. But when I see those big candles, I just want like no part of that business. You know what I mean? Because the ranges are so wide. There's not a lot of I don't know, price memory anywhere in there.
Well, there is, right? This whole 31 level, 3150, like this range, there is memory here. This is the lower end of the range, right? Support should be coming in here. And remember, not only should support come in here because this is where it's been coming in over the last year, but there's real price memory here, right? There's real resistance from 2007, real resistance in 18, real resistance in 2020. We're successfully retesting those levels. So there's where there was more supply than demand. In other words, why did the XLF, why did financial stocks peak in 2007 at these prices? Why? Because there was more selling pressure. There were more willing sellers at that price than there was demand, than there were willing buyers. That's why price fell. We can sit here all day and argue about why those market participants were sellers and why there was a lack of buyers. Like in hindsight, we know now, but it doesn't matter. We know for a fact that there's an overwhelming amount of supply relative to demand in financials at those prices. We knew that. Sure enough, when we got back to the scene of the crime in 2018, what happened? There were still more sellers than buyers. There was still more supply than demand. This is the market indicating in 2018 that demand has yet to absorb all of the supply that is there at these prices. We got back there right before COVID. What happened then? Also failed. Why did prices fall from those levels? You could say pandemic, crisis, blah, blah, blah. Yeah, maybe. But the bottom line is there was more sellers than buyers. That's why price went down at the same level where there had been more sellers than buyers going back 13, 14 years. So ultimately, we broke out above those levels and made new all-time highs in financials after 14, 15 years. That finally happened. And last summer, we successfully retested those levels, and we're retesting them now. So the bottom line is this: if we lose those lows, and the XLF, the financials are making lower lows below last summer, which is entirely possible, Spencer, because I don't know if you heard, I don't have a crystal ball. I don't know what's going to happen. All I can tell you is that mathematically, if financials are above those great financial crisis highs, I don't see a reason to panic. I see every reason in the world to own stocks. However, if you are in the world is coming to an end camp, buy ammunition and gold and Bitcoin or whatever it is, and you think the world's going to come to an end, you want to know something? The world's not coming to an end with financials above those highs from before the great financial crisis. Mathematically, the world can only come to an end if financials are below those highs. So I think for both parties, for the optimists out there, for the pessimists out there, I personally don't care either way. I'm good regardless. But some people actually do care about the direction of markets, and I would be looking at those levels.
You know how when you go to the movies and they always say, please make a note of the emergency exits? You know where your emergency exit is. So, and you have no problem buying above that emergency exit. That's all you need to know.
That's it. And by the way, I'm not necessarily buying financials here. I own some technology stocks, for example. I'm using financials in this particular case as an indicator for what we're doing, because it's a bigger gauge of the market environment, particularly this sector. This was utilities. We wouldn't be talking about it.
Sure. Yeah. Got it. All right. Let's move on here. A few more tickers. And again, if you have a ticker you want us to discuss, please drop it in the chat. That's kind of the whole point of the show. What about Snapchat? JC, this is another one that's trending today off a headline. I'm not going to tell you the headline because you don't care what the headline is, but it is a trending stock of the day. Very, very beaten down growth tech name. What is the chart say to you right now?
Well, first of all, what is the in the XLC? Let me see.
What's the weighting?
I want to know the holdings, the weightings on the communications. Is Snapchat one of the top holdings? I'm really curious. I'm looking it up right now. And this is good because it shows you guys how I think. So Snapchat is not a top holding. Let's see if it's in.
You know what? It probably used to be. It wouldn't shock me if it was among the top 10 once upon a time. It's definitely not.
Snapchat is 5.3% of the social media index. That I just did confirm. Okay, so that's good to know. So what we want to do is when we look at why are you shaking your head?
I mean, yeah, that's a pretty. I mean, XLC is one thing. Social media index is a pretty niche index. But okay, neither here nor there.
So here's the social media index. Well, when we look at the stock. Listen, this is Chart with Quest Live. I can't give you a valid opinion on the stock without understanding what it's doing relative to its peers. Right?
Totally fair.
You know what I'm saying? You're not thinking fourth dimensionally, as Dr. Emmett Brown once told a young Marty McFly. Right?
I only have 2 dimensions. All right.
So, listen, you look at this disaster, you look at this train wreck. Let's actually look at the weekly. Right. So here's your weekly chart. So here's your all-time lows. And then here's your 2000. These are your COVID lows, right? So this is what we're focused on right now is your COVID lows. That's your level. You want to be long the stock, you buy the stock against those COVID lows, right? That's it. And if we're below that, I really liked what you talked about, how the, know where your emergency exits are. I like how you did that. That was good. I'm going to use that. I'm going to steal that from you. This is what this looks like, right? This was the bottom after COVID, and this is the bottom now. If you want to be long, you could be long against those levels. I mean, I think that there's a lot of sort of, again, it all depends on your time horizon. And that's something that when we do this, I want to make sure to reiterate. What is your time horizon? Right? Like, are you trying to make money in the next 5 minutes? Are you trying to make money in the next, few weeks? Are you trying to make money in the next 6 months, 12 months? So when I look at things, sure, we do some day trading with Kimmy and stuff like that, and that's great. And I have my day trading account, but I'm the one learning how to day trade, and Kimmy's the one teaching me. Where I live in both me as a market participant as well as how we discuss things with our subscribers is we don't necessarily care what happened today. We don't care what happens next year. We'll worry about next year. We're trying to make money this quarter. We're interested in the coming weeks and months, right? That's how I look at things. And I think, Spencer, I think it's important when we do these things, and when you do them with other people as well, that you really define what your time horizon is. You go ask Brian Shannon to do the show with you. He's going to be looking at the next week or 2 weeks, right? And he might zoom out and then but really zoom in much more than I am. That's great. Doesn't make one better than the other. It doesn't make one easier or harder. Just different, right? That's how I look at it.
Yeah, that's a great point. That's a great point. Always clarify your time horizon with. So yeah, if you have a question on a ticker, drop us in the chat, and then it would be even more helpful if you said, for example, Netflix in the next month or whatever. You know what I mean?
That is
just
good.
Give us some idea of where your head is at.
Right, because it's my time horizon. Right, Spencer? Just because my time horizon is looking out weeks and months, I'm just going to default to that. If you're interested in something longer term or you're interested in something shorter term, we're applying, the market is fractal. We're applying the same principles, right?
Yep. So the reason I mentioned Netflix is because it was next on my list. So Netflix.
Let's see. Netflix is a good one because, All-Star Charge subscribers were very happy with this one. We can actually, so you can, so here was the trade originally. Let me walk you through. Let me give you a little bit of All-Star Charts history here. So Netflix, right? So here we were looking at broken support, right? From last year, right? And you got this gap down. Nasty gap down, right? Right? And then what happens? We keep bumping up against
that was earnings, I believe, if memory serves.
I think both of them were earnings. So So here we're looking at prices continue to bump up against those levels, right? Bump up against those levels, bump up against those levels, bump up against those levels. That was the gap lower high. That was the high in the gap down, right? We got back to the scene of the crime in August and failed. Got back to the scene of the crime in September and failed. Got back there in October, failed. And then we gapped up. And then what happens is that it creates this island of sorts, right? In what, nerdy technicians like me like to call an island reversal, right? That's what this is. It's an island reversal because essentially what it's doing is that it's leaving an island behind. You can see this island here, right? Right? You see this? This is the island that it's leaving behind. So when it gaps higher,
so the question, so I guess the question is, are you an island boy now?
That's funny. I see what you did there. Island boy. I don't have enough face tattoos to be an island boy. I don't think.
No, you don't.
No, I got a squadouche for the amount of face tattoos that I've got. So the trade was very simple, Spencer. Here, we wanted to buy Netflix as soon as it gapped up. Any weakness, I remember specifically on this weakness being like, dude, this is the pullback we want to buy because if we get back below these former highs, all bets are off. You want to talk about knowing where the exits are and everything like that. Those are the exits. If we lose those highs, all bets are off. But the trade is that this gap lower, this island reversal is going to act as like a vacuum, and prices are essentially going to just elevate towards those former support levels that broke down, right? So the gap is essentially getting filled, and it acts like as a magnet, and that's exactly what happened. And our targets were hit. So it's like, okay, so now our targets are hit. We take profits. Great. Yesterday's home runs don't win today's ball games. So we reevaluate and say, okay, that trade was great. Now moving forward, what do we want to do? I would only be long if we're above the lows from before the gap down. So in other words, that 330, 335 level, right? Well, we're not above those levels. So there's no reason at all to be long, in my opinion, unless we're above 330. If we get above 330 and we start hovering above here, and this turns into sort of, kind of like a little oopsies, and then we start rallying this way, I could see a move. I could see a move back up towards 450 or something like that. That's a nice trade. It's a nice trade, but we're not above 330. Got to be above 330.
All right. Next, Maybe we should get like a sound effect or something for the next one. ADP, automatic data processing. I don't know what it stands for. ADP. I haven't looked at this chart in a while.
I mean, big time winner for many years. I mean, look, when you zoom out, like, look at that. You know what I'm saying? That's what you want your portfolio to look like right there, folks. You know what I'm saying? Like that's pretty good right there, right? So it's categorize this properly. Right? Right. So when you zoom out, when you zoom in, after zooming out like that, we know the trend is substantially higher. We can take the Fibonacci extensions here.
Do you put a lot of weight in those COVID lows? It was such a crazy period of time. I'm almost tempted to like just throw that month and a half out of there, you know?
No, definitely not. No. Quite the opposite. It's actually been very favorable. In fact, you know, if you really want to, I mean, if you really want to get fancy about it, I'll show you just how favorable it's been. This is what's kept us out of the S&P 500, as a matter of fact, was exactly that. Watch this. So this is the S&P 500. All right, so this is the S&P. This is the SPX.
Yep.
You take your Fibonacci extensions. All right.
Oh, I see.
See that? If it wasn't for those COVID lows, right? You got a little whipsaw here. See what I'm saying? This has been the level right there.
Yeah.
So to a T.
Makes sense. Makes sense.
Extension levels are very important from those COVID levels. You see what I'm saying? So we're doing the same thing with ADP.
So you're in Nowheresville.
What's that?
Yeah.
It's just a mess.
You're in the middle of nowhere.
It's just a mess. Yeah. You know, there's a real lack of trend. I don't necessarily feel comfortable selling puts here at all because you got downside towards the low 190s potentially. I wouldn't want to buy it if we're below that 230, right? So right now, the market's up a little bit. It's pretty much flat on the day, up 1%, no big deal. So there's just nothing here. I mean, this is just really kind of just like a messy, you know, kind of, we could paint this red, nice and ugly. Kind of.
I do want to clarify when you say it's messy or it's a mess, it doesn't necessarily mean it's bad. It just means it's messy from the standpoint of it's hard to draw any definitive conclusions
Well, I'll tell you my conclusions. My conclusion is it's not it's a long-term uptrend, and then shorter term, it's a sideways trend, right? It is not. So then what do I do in those sort of market environments is that I look to sell premium, right? Sell the wings all day. When I see messy markets, I just my default, you sell the wings. You sell out of the money calls, sell out of the money puts, and profit from those who are deciding to get chopped up in this messy mess, right? You profit from people joining this messy party. In this case, I don't feel comfortable. I would be selling maybe the 200s maybe, but we're too far away from that. So you're not getting enough juice. And then what am I selling? I'm selling the 260s. Again, too far from it. So we're not going to get any juice. So my conclusion is I don't want to own the stock because it's not trending. And I don't want to take advantage of the premium in the options market because I'm not getting enough juice. So there's no trade here. That's the conclusion, right?
Fair.
That makes sense?
Okay. Makes sense. I only had one more stock on my list for us to discuss, and that was FedEx. And full disclosure, FedEx reports earnings in not that you care, but some people might care. Report earnings in about 3.5 hours.
Well, for the record, I do care because when I'm trading, I need to be aware of those events, right? So I need to be aware of the fact that they're going into earnings so I don't put myself in a vulnerable position, right? You also want to look at when earnings are when you're putting on an options trade. If premium is elevated because it's going into, earnings, you're going to get that premium deterioration immediately after the earnings or appreciation, right? But you're going to get an event of some kind in volatility when you see that. So I'm actually pretty impressed with FedEx. This is one of the worst companies by a long shot for quite some time. When it comes to transportation stocks, this thing was a real laggard. But I think it's important to check out these former lows, right? Remember, we talked about how the market bottomed last summer And this is when the list of new lows the list of new lows on the New York Stock Exchange and NASDAQ peaked, right around here. And the fact that FedEx broke below that just goes to show you how weak it is. Now, all of that former support, we're now back above these levels, right? So let me label this properly for those folks keeping score at home. We are looking at FedEx here. So this was support. Obviously, all this was support. And now it's turning into support once again, right? So I'm really looking at this 200 level. That's really the level for me. We're above 200. I got no problem at all being long this name. In fact, I really like this retest right back at those former support levels. I like this. I think a target probably up near 240 makes a lot of sense. Back up to that former resistance, right? But the line in the sand is about 200. Below 200, you can't touch this thing. Above 200 for a move higher, back up towards 240, those former resistance levels. I like that. I like that trade.
All right, last call on Twitter, last call on YouTube. If you have a ticker you'd like JC's thoughts on, drop it in the chat. And this is going to be a weekly show. I suspect it'll be me with some sort of a guest, whether it's JC or Steve Straza or someone else, every Thursday at this time. And this is but one of many new shows we will be launching on this channel in the coming days and weeks. So you definitely want to stay tuned for that. If you have any questions at all about anything, about what the heck this is, email us. It's on the bottom of the screen, questions@stockmarketmedia.com. Again, I'm Spencer Israel. That's JC Peretz. JC, any final thoughts for us before we hop off?
Listen, guys, I love doing this. Invite me anytime. I'm happy to do that. Any questions at all? Shoot me an email.
Oh, wait. Last call. We do have a last
one
call.
more?
We got one more.
You're stealing my thunder. I was about to tell people where they can email me.
I know. Alibaba.
Let's see.
Yeah, I basically decided to ignore Chinese internet stocks for the rest of my life. So
listen, Spencer, there's a time and a place for everything, my friend. There's a time and a place. Yeah. So I want to point you to, Alibaba here, lovely downtrend. Obviously, you can see these former resistance levels. You got your little oopsie, right? Right. And then, this is how we look at these things, right? We're very consistent with looking for overhead supply, looking for support. I mean, that's really the way the market behaves. And we're obviously stuck in this range in Alibaba. Let's see what it's looking like today. Basically flat on the day. It's just really in no man's land. So, for me, it's an underperformer. We looked at some other names that are already well above those highs that are making higher highs. This isn't one of those. It doesn't mean it can't rally from here. It really is just in a sideways trend. Similar to a few others, not getting a lot of juice if I were to sell the 75 puts. I see no reason to sell the 120 calls, too far away. So for me, this is something interesting to watch. And that's it. That's how I look at that.
All right, one more and then we'll hop. But where were all these stickers when we started here? Oracle, ORCL.
A lot of this old tech keeps popping up in scans. The relative strength of these things.
I've been seeing that too, honestly. Yeah.
It keeps coming up. So you could see here. Look at this. Look at this major move. So let's zoom out here. Let's look at a monthly, right? Look at Oracle finally getting above those.
I can't believe it. I honestly can't believe it.
See that? Finally getting above those levels, right? So this goes back 25 years, essentially.
Oracle. I mean, Microsoft was one thing. It took Microsoft 15 years. It took Microsoft took Oracle a little longer.
That. But look at the difference between.
Yeah, right. And then Joe in the chat So Joe asked about Oracle. He also asked if you could add the fib levels, please, so you can he can see the fibs on this. Thank you very much, JC.
Look at the difference between Microsoft and Oracle.
I know it's insanity. Microsoft just. All right, back to Oracle.
This is
Back to
Microsoft,
Oracle.
and then
Yes.
this is Oracle. See the difference? Monster of a difference. See
Yeah.
that? All right, so let's get some fib extensions on the Oracle here. All right. Here are your levels in Fibonacci. Those are your support levels. Here's your resistance levels. Right? So that one, call it 110. I like 110 there. To the downside, you're looking at 70. We're right in there now. We're right in between. So we're right in the middle now, right in the middle of that range. We could look even shorter term here. Why don't we look at a daily chart? It's just messy,
There's something to be said though about like old value tech right now. It hasn't been the worst place to be. So.
It hasn't been the worst place to be. In fact, it's actually been one of the best places to be. Those old value techs. Yeah. I think it was Warren Buffett or Carl Icahn. One of those have been buying Hewlett Packard. I saw it on the SEC filings list. Yeah, isn't that hilarious?
That's because I just bought some more printer ink.
It's actually not called Hewlett Packard anymore. It's just called HP. Like they want people to forget about it.
Yeah. All right. That'll be a good place for us to wrap today. Again, this has been Chart Request live on Stock Market Media. He's JC Peretz. I'm Spencer Israel. If you haven't already, drop us a like. We'd appreciate that. And I guess just stay tuned for more new shows and send us an email, questions@stockmarketmedia.com. Tweet at us. He's at All-Star Charts. I'm at SJ Israel. And that'll be a wrap. So have a good rest of your day and catch you guys later.
Adios.